Welcome to Dukascoin TV's On Finance. We've got some financial news updates for you on the way, and we provide you with the updates of financial news of what's going on around the world on personal finance, crypto, stocks, and plenty more. On this episode, we're going to be specifically looking at the new India's crypto tax, so stay tuned. The Indian government has introduced tax implications on cryptocurrency for the first time in the union budget of 2022. Now, their plan is to have a 30% tax on cryptocurrency earnings starting from the 1st of April. The crypto law was first proposed by the Central Board of Direct Taxes Minister J.B. Mohapatra in February 2022 and approved by the Indian government. This will be imposing the tax under a 1% TDS, tax deducted by source system, which will start on the 1st of July 2022. Now, according to the minister, Indians will have to start paying a 30% tax on cryptocurrency or any other virtual asset gains starting April 1st. The news received mixed reactions amongst cryptocurrency investors around the country. Now, many don't refuse the idea of the government implementing a tax on cryptocurrency, but do believe that the 30% on cryptocurrency gains and the 1% of the entire transaction is on the high end. Now, others do believe that the country made the percentage so high to scare off cryptocurrency investors. India is one of the sovereign nations in the world to start receiving taxes on crypto gains. Other countries like United States, Italy, Canada, Germany have also made regulations to collect tax from their citizens on cryptocurrency. Although these countries classify cryptocurrency as asset, they tax them differently. Cryptocurrencies in India are considered as virtual assets. So if a person sells cryptocurrency for gains, she might be subject to being taxed, regardless whether it is a short-term or a long-term investment. So how is the new crypto tax law in India expected to work? The 30% tax will be charged only on realized gain. So this means Indian crypto investors are only eligible to pay crypto taxes at the point of sales when they make profit, but their initial investments won't be taxed. If the Indian government succeeds in scaring its citizens away from the cryptocurrency market with high taxes, strict laws, will this affect the growth of the cryptocurrency market as a whole? Firstly, we need to understand that India has the largest population of crypto owners globally, with over 100 million people holding one form of crypto asset or the other. This accounts for around 7% of the Indian population having over $10 billion worth of cryptocurrency assets. According to Ramesh Kailasam, India Tech Chief Executive letter, if the intent of the proposals was to seek additional revenues from such crypto assets, then the 1% tax on the entire transaction value will render the business unviable, thereby having an impact on government revenues, forcing the investors and those engaged in trade to operate overseas or be forced to resort to operating through opaque P2P methods. Over the years, we have seen companies source for Indian tech talents in crypto space. For example, in January 2022, Scion Digital announced it's in the process of developing an R&D center in Pune, India, and said that the recruits would be sourced from across India. Seems pretty clear that the Indian government will not throw such a capital inflow away. Now that the Indian government receives tasks from its citizens, the government will be able to protect its citizens from crypto scams and regulate local and foreign exchanges. It is expected to see a more safe crypto investment environment in India shortly. There is hope that more experienced Indian investors will be actively involved in crypto investments since the government now regulates that actively monitors the industry. Also, novice traders will keep their distance from the markets because they have no experience navigating the tax law. Is it expected the rate to remain at 30%? Obviously not. A lot has not been made clear on the guidelines on how the Indian government will tax virtual assets. Nevertheless, trust us to keep you updated as the matter unfolds. And that's all we have for today. But hey, make sure you keep yourself up to date with the latest finance news on our social media. I'll see you soon on the next episode. Thank you.